Today, we will talk about bounced checks. A bounced check is a check that cannot be processed because the account holder has non-sufficient funds available for use. Banks return, or bounce, these checks rather than honor them, and banks charge the check writers NSF fees. Passing bad checks can be illegal, and the crime can range from a misdemeanor to a felony, depending on the amount of the check and whether the activity involved crossing state lines. Many times, bad checks are written inadvertently by people who simply are unaware of their low bank balances. A bounced check may result in overdraft fees, restrictions on writing additional checks, and negative impacts to your credit score. Writing too many bounced checks may also prevent you from paying merchants by check in the future. Merchants use a verification system called telecheck to help them determine if a customer's check is good. If this system connects the check you've just presented for payment to a history of unpaid checks, the merchant will decline your check and ask you for a different form of payment. When there are insufficient funds in an account, and a bank decides to bounce a check, it charges the account holder an NSF fee. Different banks charge different fees for bounced checks and overdrafts, but as of 2022, the average overdraft fee was $29.80. Banks usually assess this fee on drafts worth $24, and these drafts include checks as well as electronic payments and some debit card transactions. Bank fees are just one part of bouncing a check. In many cases, the payee also assesses a charge. For example, if someone writes a check to the grocery store and the check bounces, the grocery store may reserve the right to redeposit the check along with requiring the writer to pay them a bounced check fee. Negative reports with organizations like check systems can make it hard for consumers to open checking and savings accounts in the future. Consumers can reduce the number of bounced checks they write by tracking their bank balances more carefully and by using an ironclad system of recording every single debit and deposit on a check register as soon as it occurs, or by keeping close tabs on their checking account by using online banking. Alternatively, consumers may opt to write fewer checks or use cash, debit cards, and immediate online payments such as mobile wallets, PayPal, or the like for discretionary spending. Here are 4 key takeaways. 1. A bounced check occurs when the writer of the check has insufficient funds available to fulfill the payment amount on the check to the payee. 2. When a check bounces, it is not honored by the depositor's bank and may result in overdraft fees and banking restrictions. 3. Additional penalties for bouncing checks may include a negative credit score marks, refusal of merchants to accept your checks, and potentially legal trouble. 4. Banks often offer overdraft protection to prevent inadvertent check bouncing. Hope this would help. Thanks for watching.